Hi, thanks for joining me and welcome to today's video. We're going to be answering a viewer request to give you a DYI video, a do-it-yourself video on how to calculate the taxes on your estate. Now, there is no estate taxes in Canada. There is taxes on certain assets within your estate, but I'm going to lead you through specifically how to calculate the taxes on an RRSP account or a RRIF account. I'm not going to get into real estate because that's a totally different animal. We'll just park that to the side. But this should appeal to a lot of different people because most people are either in a tax-free savings account or an RRSP when they go to retire, or they have a pension from their employer. So this should be able to be a good video for quite a bit of people. It should answer a question for you. If you're new to this channel, hi, my name is 𝗍𝗶𝗄𝗏. I'm an active advisor working with clients right across Canada, business owners, individuals, and families. I do their written financial plan, I invest their money, and I do their insurance. And yes, I make educational videos on financial planning. I believe that the more education you have around financial planning, leads to better questions, and of course, better questions lead to better outcomes. So let's dig into why you're here today. There are 3 steps to you calculating the taxes on your estate. Of course, if you were to just contact an advisor like myself, we're going to be able to do this for you really quickly and give you a lot more information than just the tax on your estate. But if you're set on doing this yourself, you're just curious about what it would look like, I'm going to give you 3 steps to follow. So let's dig into the first step. The first step is calculating how much money you have in your RRSP today and what that value, what is going to grow to until, let's use age 65. So whatever your age is today, we're going to show a rate of return and how it grows to 65. And then step 2 is you turn that into a RRIF, you start receiving an income, and we're going to have that from age 65, let's go all the way to age 90, and then you pass away, and let's look at what the end balance is in your account. And then the third is how much tax you're going to have to pay on that account. Okay, so it's pretty simple. Let's go to the first website I'm going to lead you to, and that is, it's called 𝗍𝗶𝗲𝗄𝗏. This .ca. This is a site sponsored by the Ontario Securities Commission. It is no advertisements. It's not something that you have to worry about putting information in and then you get an email. You just get to explore this site without any worry from being contacted about a credit card or anything. You can simply just type in a question here or use these drop-down menus. Where I want you to go for step 1 is calculators and tools, and just scroll down to the bottom of the page, RRSP savings. It's probably off the view of the screen here, but just go all the way to the bottom. And then once you're on this page, just scroll up to these fields and the amount currently you have in your RRSP account. Now, I'm going to be using someone who's age 50, okay? And it's likely that if you're 50 years of age, you'll have $500,000 or more in your RRSP account. You're likely, you're still working, so you're probably willing to take on a little bit more risk, so I'll change that to 6%. If you have $500,000 in your RRSP portfolio, it's likely you did not contribute. The average contribution in Canada is about $5,000, so it's probably you've been maxing out every year. But I'll just put $15,000 for this example, and we're age 50. You can use these sliders too to change those values. And we're going to work until age 65, so another 15 years, and then we're going to retire, turn this into a RRIF, and we're going to treat it as your income source, right? Now, go to the next slide. The next part is really about how many years you're going to be retired and living in receiving an income. And some people have struggle with this, and this is really individualistic. It really talks to you about your own family history, longevity, your current health. On average, people are living longer, but you have to be honest about this and figure out what does your health look like? What of your parents, grandparents, all these longevity questions. Here's some statistics for you if you want to have a look at this slide right here. It talks about life expectancy. If you're age 65 today, a couple, and you're a non-smoker, you have a 90% chance of reaching age 85. Now, if you're not a couple, and you can see the numbers drop, I don't want to say dramatically, but certainly dramatically for men if you're a smoker or non-smoker. So there is some value in being married during retirement, that you tend to live much longer. Doesn't say anything about being happily married, just simply that you live longer. So there's some food for thought if you're trying to figure out your own situation. But I'm going to leave it at 25 because we want to calculate this out to age 90. And I'm going to change this. You're probably wanting to get at least 4% growth rate. most people who are retired who are counting on their RSP balances for their retirement income, they don't want to take too much risk, and so you want to grow it ahead of inflation and moderately ahead of inflation. If you have a look at this chart here, it shows that inflation historically over the last 25 years has been around 3%. So 4% is in that range that I think is acceptable. Hit calculate, and you can see that $500,000 with a $15,000 contribution for the next 15 years grows to $1.5 million. And here's a wonderful graph. You can see this is your accumulation phase, and then here you are spending your money. Let's go to the table though and change this to all rows. I'll just lead you through the first one and then I'll skip to the 15th. Your contribution, so you've got $500,000 you started off with, and you have an annual return of 6%, so there's your $30,000, there's your contribution, and $545,000 is the end of year value. So if you skip down to year 15, you're now 65 years of age. You have a total amount contributed of $710,000, and this is the last year you contributed to your RSP in this example, and your balance is $1.5 million. I'm going to highlight that amount, okay, and copy that. And now I'm going to go up to, this is step number 2. This is the really cool part. Step number 2, we're going to convert your RSP into a RRIF. So we're going to go back to calculators and tools, and I'm going to go down to RRIF withdrawal. Now in this field, we're going to paste that value that we just copied from the end of year value of age 65. I'm going to paste that value, that 1.5 million, and I'm going to change this to age 65. Don't worry about your spouse's age. If you want to use that, if you want to put your spouse's age in there, go right ahead. And then we're going to calculate this to age 90, and we'll leave it at 4%. Hit calculate and change to all rows. And you can see here, just as a side note, there's your 1.5 million, your minimum withdrawal. How do we get to minimum withdrawal? This is this table here, if you're curious to know about how that works. I'll just show you that quickly. RRIF is based off of your age. This is something you don't have to calculate. Revenue Canada does this by your age. You can see the values on the right side, 4% at age 65, and every year it goes, you get older, the RRIF amount, the minimum you have to take out, goes up each year. So that's how RRIF balances are calculated every year, December 31st, and you don't have to do that, it's done for you. So back to this website, you can see your minimum withdrawal was about $62,000, but you know you're getting 4% on that 1.5 million, so you made about $60,000. So you're really not digging into your own principal all that much in the beginning years because the withdrawal rate and your rate of return are pretty similar. And so you can see if you go down to age 71, that's the age where some people will elect to defer their RSP and then begin the RRIF at age 71. Well, look at here. This is 1.49. We'll call it 1.5 million. You're making about $79,000 in withdrawals. This is your RRIF minimum withdrawal. And you made about $58,000. So now you're starting to cut into that principal a little bit, but you're still making a sizable amount of money in your RRIF. Let's go all the way down to the bottom of the page. Age 90, the person passes away. Remember, we're using this example as age 90. They have an end of year balance of $705,000. So they've been taking out all this money all these years, but they still have $705,000. So I'm going to copy this, and we're going to go to this website. Don't worry that it says 2022 personal tax. They're going to update this website and it'll say 2023. Simply paste that value in here. Whoop, 705,000, right? So 705. Hit calculate and go to your province. You'll see how much money you're going to be giving to Revenue Canada. Ontario, $337,853. That's an average tax or marginal tax rate of 53.53%. So essentially, as you pick your jaw back up, your executor is going to get your RSP or your RRIF balance, and all that money is payable in the year that you pass away. So that $700,000 gets added to your tax return, including your CPP, old age security, any other pension investment income, any rental, all that gets added in there. But just from your RSP, you're going to lose over $300,000. Now, there might be some adjustments that your accountant can make to offset that, but essentially you're losing half of your RSP balance. So now think about that. You have been investing in an RSP all your life because you're trying to lower your tax each year that you're working, so you have more money to use each month or each year, and you get to the final years of your life and you didn't spend the $700,000 that was left over, and you end up giving half of it to Revenue Canada. So if you're in the camp that says, I don't care, I passed away, I don't care what's left over, that's fine, that's enough money. But if you're in the camp where we just talked about saying you've been mitigating your tax rates all your life, then you probably want to do something about that. And that's where you need to talk to an advisor to figure out what is an appropriate withdrawal strategy for you so that you're going to pay less tax throughout your lifetime and less tax going to Revenue Canada, so you can actually enjoy more of your money. If you don't have a withdrawal strategy, please send me an email, give me a call. I'm happy to talk with you about developing a withdrawal strategy for yourself. Well, I hope you enjoyed today's video. I hope it was insightful and you're able to figure out what your situation looks like. Thank you for your time, and I look forward to seeing you in the next video. Thanks very much and take care.